spotlight on corporate conversations. First up, we've got Mr. Rajesh Ganesh, the Managing Director and CEO of Bajel Projects, joining us on the show. Mr. Ganesh, hi, good afternoon, rather, and thank you for your time. Let's take a look at how this quarter has shaped up for you. And let's start by talking about your order book. That has grown significantly over the past few years, and that now stands at around 4,000 crore rupees. How are you looking at the execution timeline? How much of this order book can be executed in FY27, and what could the contribution to your top line be?
Yeah, well, good afternoon, Snehi, and thank you for having me on your show. So we've won two orders recently. Both put together would be in excess of 700 crores combined, and these are part of Western region, Eastern region network expansion scheme for connecting Chhattisgarh and Jharkhand. So these are PGCIL projects. And with this, our order book sort of stands a shade bit north of 5,000 crores as on date. So to that extent, yeah, we're quite excited about it. In terms of executability, well, orders that we get in the first and second quarter, some part of it would get executed in this financial year, and the balance would be over the course of the next financial year. Usually, these projects tend to be about 18 to 24 months in terms of duration.
Okay, so you're telling us that the order book now stands at about 5,000 crores, and most of the orders that are won in the first and second quarter get executed in this year itself. Given
Well,
that backdrop, at the end of the last quarter, you did tell us that FY27 revenue growth is likely to be at more than 15%. And you were fairly confident of achieving this target for the full year. Do you maintain your stance, and what will your revised revenue growth outlook be for FY27 versus FY26?
Yeah. So, yeah, thank you for the question. Could I make a slight bit of correction? Not all of it is going to get executed in this financial year. Some of it is going to get executed. As I said, the project duration tends to be 18 to 24 months, depending depending on the type of project. In terms of guidance for the year, well, we stand by the guidance that we had given earlier, which is 15% growth in revenue. I think it's a tad bit early to comment on that matter, given we are just in the sort of early parts of quarter two. Once we see this quarter through, I think things would emerge a lot more clearly.
Okay, understood. And what did that mean for your EBITDA margins? Sir, just trying to understand, because this time that number has come in at 3.3% compared to 2.7% last year. You have seen an expansion when it comes to your EBITDA margin, but any number that you are targeting towards the end of the year?
Well, I mean, a stated strategy of ours is to look at sort of high single-digit EBITDA margin. That's really where we're going to, and that's where we want to take this journey to. So, to that extent, our endeavor would be constantly to improve that number going forward.
So you're at 3.3%. You're aiming for high single digits. So I'm assuming anywhere between 8 and 9% is something that you're looking at. Can you give me a timeline? Because you're currently at 3.3. What is this journey towards 7, 8, 9% going to look like?
Oh, well, I mean, it's going to take time. I mean, it's not going to be sort of a year or so, but we're looking at, as part of our stated strategy called Rasta 2030. So that's sort of more the timelines that we're looking at. And as you've seen over the last couple of years, we've seen, increases that are coming in EBITDA margin. So, we should see that continue up until the point we reach at that number that you're talking about, which is like 6, 7% odd number.
And what are the factors that are driving margins? Because I believe you have already hedged your aluminium exposure, but as far as steel and other commodities are concerned, they continue to remain volatile, especially because of West Asia crisis. What are the factors that are driving EBITDA margin and the fact that you have now given that guidance?
Yeah, well, you're spot on. Cost of goods sold as a percentage of revenue is something that we're aiming for, something that is much less than 80%. Closer to 75 to 77% is where we are aiming for. And commodities have a big role to play there. You're absolutely right in terms of aluminum. So far, so good. But steel can't be hedged, unfortunately. So we'll have to find other ways to manage the risk of steel. Zinc is another commodity that we use in our manufacturing facility, and that is also something that we're looking to hedge going forward.
Okay. Just talking about your newer segments and newer forays, Mr. Ganesh, you've also entered the data center segment with a 300 crore rupee order win, if I'm not wrong. What's the visibility on orders when it comes to data centers? What are your plans to accelerate within this segment, and how big of an opportunity can data centers be for you in the medium to longer term?
Yeah. So thanks for that question. Well, we are looking at data centers, quite aggressively. We've won our second project in data centers near Mumbai. This is a 400 to 20 33 GIS extra high voltage infrastructure that we are building for that data center. So to that extent, so that's good. Now we've won our second project, and we're working on more projects to get into the pipeline. So, if things go well, we should see more come through.
Okay, so that's as far as the data segment is concerned. But what about exports then? I believe in the quarter gone by, you have won an order in Egypt of about 400 odd crores, and you were
Yeah.
also looking to expand into the African region. Any guidance that you can share with respect to orders and how it is progressing?
Yeah, no, it's a stated strategy to grow our international business. We probably the last one off this table. All the competitors are well entrenched in international markets, so we're looking to grow that. So we're quite excited about Egypt. It's been delayed, unfortunately. We were hoping that we could have started that one sooner, but because of the problems in the Middle East, that's got delayed. And yeah, we're looking at projects in Africa as well, but those are in different stages of tendering and bidding. So as something comes through, we'll be sure to put it out into the public domain.
Okay, we'll be looking forward to that. And thank you so much, Mr. Ganesh, for your time. Good to be speaking with you, and good luck for the quarters to come. Hope to
Thank
interact
you
with
very
you
much.
once again very
Same here.
soon. Thank you so
Thank you.
much.